let's talk about NVIDIA. For what feels like forever, it's been the king of the stock market, right? The one single engine pulling the entire train. But veteran analyst Pablo Gil is now waving some serious red flags, warning that the whole party might be coming to an end. After a truly mind-blowing run-up, NVIDIA has dropped a full 20% of its value. And we're not talking about a small dip here. That's over $1 trillion in market cap, just gone in about a month. So that brings us to the million-dollar question, or I guess the trillion-dollar question. Is this just the market taking a breather, a totally healthy and normal thing? Or is this the first domino to fall in a chain reaction that could have catastrophic consequences? To understand the risk, you have to see this. Just 7 companies, 7, make up a full third of the S&P 500's value. You know, they're not just part of the market anymore. For all practical purposes, they are the market. And that leads to a pretty scary thought. If NVIDIA, the leader of this pack, actually starts to sputter, its problems aren't going to stay contained. What Pablo Gil is pointing to is a systemic risk, where one company's fall could drag the other 6 and the entire market down with it. Okay, so let's get into the first piece of evidence in this whole investigation. We're going to look at how the competitive ground under NVIDIA's feet is, well, starting to look a lot less stable. You have to remember, for years, NVIDIA was pretty much in a league of its own. If you were serious about building advanced AI, they weren't just the best choice, they were really the only choice. That kind of monopoly gave them incredible power to basically set whatever price they wanted. But that's all starting to change. A new challenger has officially entered the ring. Google, who's been quietly building its own incredible AI tech, is now starting to offer its infrastructure to other companies. That's a direct shot at NVIDIA's dominance. And this isn't just theory. We're now hearing that a tech giant, Meta, is seriously talking with Google about using their systems. If a customer that big jumps ship, it sends a massive signal to the market that NVIDIA's impenetrable fortress, well, it might not be so impenetrable after all. All right, time to put on our detective hats and dig into the numbers. Because this is where Pablo Gil is finding some really big disconnects between the story NVIDIA's telling and what the data actually says. The story we've all been hearing, the one that's been driving this stock to the moon, is all about overwhelming demand, right? They can't possibly make chips fast enough for all the people who want them. Okay, but here's red flag number 1. According to the data Gil is looking at, NVIDIA's own inventory has shot up by 70%. Now, if you can't keep up with demand, how do you end up with a huge pile of unsold product sitting in a warehouse? And the second clue, it's even more telling. The street price for their top-of-the-line H100 chips has apparently dropped by about 30% since August. I mean, basic economics 101. When demand is way higher than supply, prices go up, not down. So when you put those two pieces of data together, they just don't add up with the official story. It makes you ask a really tough question. What's actually happening here that maybe the rest of the market isn't seeing? So let's turn to the stock charts now and look at the very specific numbers that Pablo Gil has flagged as potential points of no return. Think of these as technical tripwires that, if crossed, could set off a much bigger chain reaction. And the reason these tripwires are so critical goes back to the market's structure. With the Mag 7 making up a third of the S&P 500 and an incredible 61% of the NASDAQ 100, a big drop in just these stocks won't be contained. It's guaranteed to pull the whole market down with it. So, according to this analysis, there are 2 specific price points that could be the trigger. These are the lines in the sand that could kick off a serious, cascading sell-off across the entire market. The first tripwire is for NVIDIA itself. The analysis says that as long as the stock price stays above $164, the long-term upward trend is still alive. But a break below that number would signal a really major structural change for the stock. But this second level, this might be even more important for everybody. Gil points to the 340 level on an index that tracks the Magnificent Seven as a group. If that whole group breaks below this point, it could be the confirmation that a market-wide reversal is here.
So, with all of this on the table, the new competition, the weird data, the technical warning signs, we get to the absolute core question of this entire analysis.
Gil's argument is that we are seeing a huge shift in what the market actually cares about. You know, the old days of just rewarding companies for big promises about the future, that seems to be over. The new reality is investors want to see real profits right now. And you can see this playing out in real time. Look at how the market is punishing companies like Oracle for taking on huge debt for projects that aren't making money yet. And at the same time, it's rewarding companies like Google, which prove they can turn their investments into actual earnings. The fairy tale story just isn't cutting it anymore. So look, the big takeaway here isn't that AI isn't a revolution. It absolutely is. Nobody is questioning the power of this technology. The real question, the one that hangs over this entire market, is whether the astronomical prices we're all paying for these stocks are actually sustainable, or if we're just living in a massive bubble that's waiting for a pin.